Hello and welcome to Business Incorporated. I'm Ladi Williams. Coming up on the show today, South Africa's inflation rises slightly to 3.2% in January from 3.1% in December. And producer price inflation in Ghana increases to 9.1% in January. And Afrexim Bank and the African Association Automotive Manufacturers sign an MOU on Africa's auto industry financing. Let's get the show started with the market figures, which were in the negative territory at intraday. The NSE in Nigeria continued its bearish run and was down 0.54%, while the GSE declined 0.16%. In Egypt, the EGX 30 was lower by 0.12%, and Kenya closed positive on Wednesday. And markets in the Middle East were mixed at intraday. In the UAE, Dubai's main index declined 0.70%, while Abu Dhabi's index gained 0.12%. Elsewhere, Saudi Arabia's index rose 0.20%, while the Qatari index declined 0.67%. And European stocks were flat this morning as investors digest earnings from big names in the region, including Airbus, Barclays, and Daimler. Chelsea has more updates for us. Hello, Chelsea. Thank you for joining us. It's a big day for European earnings. First off, Air France, KLM, has reported its 2020 financial results. What did they show?
It was a very tough year for Air France KLM, and that's obviously to have been expected. We heard last week from the International Air Transport Association that passenger volumes were down 66% for the global market last year. So for an airline, that's a catastrophic blow. Air France KLM reported a loss of more than 7 billion euros last year and said that it saw a huge decline in revenue. And now this is really putting more pressure on the company to look to governments once again for bailouts. Air France has already gotten a bailout from the French and Danish and Dutch governments, but they now may have to get a second bailout because of how severe the blow has been to the market. And many airlines were hoping for a recovery this year as we see vaccines being rolled out across the world, but because of the new variants of the coronavirus, many airlines are now saying that they aren't as optimistic as they had previously been.
And Airbus, the world's largest plane maker, also reported its 2020 earnings and gave its outlook for the current year. What are investors making of this news?
Well, investors have been quite disappointed by this Airbus report. We saw the shares of Airbus falling almost 4% earlier in the session. It's come back a little bit, but clearly a negative trend for Airbus. The company has reported a loss for 2020 as well, and they said they saw that their orders fell about 60% in 2020. That's obviously because as a company that makes planes, they're extremely dependent on the airline market. So because airlines are suffering so much, they aren't getting orders for their planes. Many airlines have been canceling orders. We also have seen Airbus say that they aren't expecting the market to fully recover until perhaps 2023, 2024. And I think that's what's really disappointing investors here. The company is basically saying they don't expect much of a rebound this year and that a recovery in the market will be many years off. So people had been a little bit more optimistic. They had been hoping that the company would see a recovery starting perhaps this year. All of these recoveries are now being pushed further down the line because of the spread of the virus and the very slow rollout of vaccines.
And looking at big tech now, Facebook has cut off access to news in Australia after the government introduced a law to force the social media giants to pay for news. Many other governments, including the EU, want to follow in Australia's footsteps. What has the reaction been to Facebook's move?
There has been a lot of criticism of Facebook's move already, both in Australia and across the world. And you have to remember that this case, Australia's move to force companies like Facebook and Google to pay for news, has really been seen as a global precedent. So many countries want to follow in Australia's footsteps, including the EU, which has discussed potentially writing some of the Australian measures into its own laws to try and force these companies to pay news publishers. The fact that Facebook is now cutting off access to news in Australia instead of paying publishers for news has been really a shock for a lot of people, and many say that this really strengthens the calls for governments around the world to step in and try and rein in the power of these companies. We heard, for example, from the British news associations ahead that Facebook is acting like a school bully here by cutting off this access because they're not getting what they want. So I'd say this really will strengthen the resolve of a lot of governments to try and rein in these companies in terms of regulation.
I'll talk about big tech getting too big. Thank you, Chelsea. I'll talk to you tomorrow. Thanks for the update. And in the UK, the FTSE 100 index in London is back in positive territory, up 0.09% in the morning. Let's see what has changed this intraday with Simon. Hello, Simon. Thank you for joining us. Let's kick off with the earnings report. Barclays has released its results, beating forecasts. The bank has resumed dividend payment as its 2020 profit dropped by 30% to £3.1 billion. What do you make of this result?
Good afternoon. Yes, Barclays, as you said there, have reported their full-year profits of £1.53 billion. That's $2.1 billion for 2020. Now, that's down 38% from 2019, so not good news at all there. But this did outstrip analyst expectations, which were, of course, ultra-gloomy due to the economic conditions. So while it may sound bad, actually, I think the bank will be quite pleased with that. It's revealed that it has been forced, though, to set aside £4.8 billion for loans that are expected to turn sour, so basically admitting that times are so tough, many people and companies won't be able to repay loans. The bank has been one of the biggest providers of emergency loans during the coronavirus, having given around £27 billion to businesses. The British lender posted a fourth quarter net profit attributable to shareholders of £220 million, despite the UK enforcing more lockdown measures. They plan to pay shareholders 1p per share for 2020. That's alongside a share buyback program worth around $700 million. It is the first bank to restart dividends or giving shares out to customers or to shareholders, and that's after the Bank of England lifted its temporary ban on shareholder distributions in December.
So how is this impacting Barclays shares, and what are the market numbers saying this intraday?
Well, Barclays shares actually fell almost 4% today after those annual profits halved. They were broadly flat in early trading, but they then did fall, probably due to the mixed nature of the news, the negative being the amount set aside for loans and the positive being outstripping those expectations. If we turn to the markets then, and the FTSE has dipped across the board today as relatively gloomy earning reports from Smith & Nephew and also from Barclays that we've just been discussing highlighted the hit from the pandemic on the economy. The FTSE all-share down nearly 0.3%, the FTSE 100 down just over 0.3%, and the FTSE 250 down almost 0.25%. The pound, though, all in the green, riding high, reaching its highest in almost a year, actually, against the single currency, the euro, amid expectations of a faster economy in Britain, thanks to the successful rollout of vaccinations that I know you've been covering with Juliana. The pound rose almost 0.5% on the dollar, 0.24% against the euro, and its highest since March of last year. And the pound was also up on the yen by just over 0.3%.
Yeah, and the pound keeps going. Are the markets also trailing the rising oil price on the international market?
Yeah, global crude oil prices have been rallying after the Organization of the Petroleum Export Countries, or OPEC Plus grouping, decided to continue with supply curbs. A 50% jump in oil prices over the past 3 months. People think this hasn't finished. It could keep rising. Some of the biggest investment banks have even started to call the start of a new commodities supercycle, which by definition lasts years, typically about a decade. Forecasts reflect the impact of fiscal stimulus efforts on oil demand, just as supply has been crippled by underinvestment in new production. The predicted path for oil prices kept shares in BP and Royal Dutch Shell in recovery mode today. That's even as Brent crude paused for breath at a recent high of $63 a barrel. Yesterday, the FTSE 100 surged, by the way, 2.5%, making further gains to its highest point in over a month. And analysts think that this was partly due to the news that there could be a new commodities supercycle on the way. So, yeah, the price of oil keeps on going up.
All right, Simon, thank you so much for the update, and do enjoy the rest of your day.
Thank you.
And stocks in Asia-Pacific were lower today as mainland Chinese markets returned to trade after a longer Lunar New Year break. By the Thursday market close on the mainland, the Shanghai Composite rose 0.55% to 3,675.36, while the Shenzhen component fell 1.22% to about 15,767. Hong Kong's Hang Seng Index slipped more than 1% as of its final hour of trading, while South Korea's Kospi fell 1.5% to close at 3,086. The Nikkei 225 in Japan closed 0.19% lower at 30,236, while the Topix Index declined 1% to finish its trading day at 1,941. In Australia, the S&P ASX 200 closed little change at 6,885.90, and MSCI's broadest index of Asia-Pacific shares outside Japan fell 0.8%. And stock futures moved fractionally lower this morning ahead of the release of a key indicator for the job market. Futures contracts tied to the Dow Jones Industrial Average ticked lower by 16 points. Those for the S&P 500 and Nasdaq 100 also both traded in negative territory. The move in futures comes after Wednesday's session in which the broad market struggled to pick a clear direction. And the Dow, buoyed by Chevron and Verizon, ticked slightly higher to set a new record. But the S&P 500 and Nasdaq Composite closed in negative territory. Investors will get several new pieces of economic data today to gauge the pace of U.S. recovery, including initial jobless claims. And oil prices rallied again in early trade today to hit a 13-month high. Concerns that a rare cold snap in Texas could disrupt U.S. crude output for days or even weeks prompted fresh buying. Brent crude climbed 1.4% to $65.23 a barrel, touching its highest since January the 20th, 2020, while U.S. West Texas Intermediate crude futures gained 1.1% to $61.80 a barrel, and that's its highest since January the 8th, 2020. Both benchmarks rose about $1 on Wednesday and have gained more than 6% since their close last Thursday. Texas oil producers and refiners remained short for a fifth day on Wednesday after several days of blistering cold, and the governor ordered a ban on natural gas exports from the state to try to speed the restoration of power. And the fast growth in demand and prices are setting up avocado as one of the top crops to be traded. Avocado production has been growing sharply, especially in hotels and restaurants. Apart from its delicacy features, it also has appealing health benefits. Let's talk more about the price and production of avocado in Nigeria with Lawrence Messi, research analyst at financial derivatives company. Hello, Lawrence. Thank you for joining us.
Good afternoon. Thank you. Good
afternoon. So, in spite of its growing demand, the price of avocado globally has only increased by about 5%. And at a time when food inflation in Nigeria is at 20.57%, what is responsible for the sticky pricing of avocados, and how long can it last?
Avocado as a fruit has actually been around for a long time, but because it just started to become a tradable commodity, especially on the international markets, it's actually in what we call the introduction or the growth phase of its product life cycle. So within this phase of its life cycle, it experiences a bit of awareness and a lot of competition in the market because people are just beginning to know the benefits and to enter into the market. So this increased competition actually is what keeps the prices at a stable state. So it's when demand begins to increase, when there's more awareness and people begin to want the commodity more, then we can expect the prices to rise and for the product to get to what we call the maturity phase of its life cycle. And so it's this current trend that sees the prices of avocado to remain sticky downwards.
And Nigeria is a fringe player in the global avocado market. While there is great potential for its production across the southwest and Edo State, there's still huge smuggling of avocado from Benin Republic. How is it possible for the production of avocado to be viable in neighboring Benin Republic and yet is challenged in Nigeria?
Oh, thank you for that question. It's all down to the fact that there's actually low patronage of avocado in Nigeria because of the lack of awareness to the benefits that this fruit actually provides to people. Another reason is because of the lack of modernity in agricultural processes for farmers to actually think about undergoing the production of and farming of avocado. Also, it's because of Benin Republic is actually a transit country. So it has favorable trade policies, which can also be seen from the Cotonou agreement it has, which allows it to enjoy duty-free imports from Europe, which avocado actually dominates. And so in addition to all of that, the gestation period for avocado fruits is quite high. If you're planting fresh seeds, it takes about 10 to 15 years to actually bear fruits, and this discourages a lot of farmers to actually farm avocado. So all these factors rolled into one is actually why there's not so much production of avocado, but instead Benin Republic has more because of its access to imports and favorable trade policies. So that's why there's smuggling from Benin into Nigeria.
Wow, interesting. It takes a really long time to actually grow them. But avocado has been found to possess many health benefits and possible industrial uses. How can these factors be utilized to increase Nigeria's global share of production and improve Nigeria's comparative advantage?
All right, to start, I'm going to tell you a bit about the health benefits. So avocado has a lot of healthy monosaturated fatty acids, which is actually good. It helps to control obesity, diabetes. It also assists in skin retention. That's your complexion as well. Avocado also provides a lot of vitamins and minerals. Also, the extracts from avocado are used widely in the food and beverage industry and pharmaceutical industry. They are used for skincare products. So these are a lot of the benefits that avocado actually provides to people. So how can these benefits actually be used to improve production and comparative advantage? It's in three quick steps, actually. The first is research. There needs to be more research to understand more uses of avocado and how to consolidate on the current uses of avocado, and also improved agricultural processes so that maybe this gestation period can be faster. The second is awareness. People need to understand the health benefits of avocado, especially coming off the back of a year of a pandemic. So health is and hygiene is really important. So when people understand the benefits of avocado, and also when corporate executives understand what they can use the extracts to produce, that would be the second step. And then the third step is active investment in avocado production in Nigeria. This could be through farmer sensitization on the economic and health benefits of the fruit. It could also be through investment in machinery and modernized agricultural processes as well. So all these factors would help to improve Nigeria's production and comparative advantage in the avocado market.
Interesting. I don't know about you, Lawrence, but I'm going to go load up on some avocados after the show. Maybe get a smoothie or something. Thank you so much. Thank
Good.
you so much, Lawrence. Thank you so much for your time.
Thank you.
And latest data from statistics, South Africa show that country's inflation has risen to 3.2% in January from 3.1% in December due to the impact of the fuel price hikes on household consumption. Report says the main contributors to the rise in inflation rate were food and non-alcoholic beverages, housing and utilities, and miscellaneous goods and services. Meat prices rose 1.5% between December and January, while fuel prices went up 3.2%, the first monthly increase since August 2020, though year-on-year fuel prices were 8.6% lower. Statistics SA says public transport, however, experienced very large monthly decreases as car rental rates, airfares, and long-distance bus fares declined during the festive season. And Ghana Statistical Service says the producer price inflation for January stood at 9.1%, indicating a 2.1% increase from the rate recorded in December 2020. On a month-to-month basis, change in producer price index between December 2020 and January 2021 was 3.5%. The report indicates that the mining and quarrying subsector recorded the highest year-on-year producer price inflation rate of 27.4%. Followed by manufacturing subsector with 7.5%. Manufacturing subsector recorded the highest monthly inflation rate of 5.1% for the monthly changes, followed by mining and quarrying subsectors with 0.1%. And the African Export-Import Bank and the African Association of Automotive Manufacturers have entered into a memorandum of understanding for the financing and promotion of the automotive industry in Africa. The partnership, which will facilitate the implementation of the bank's automotive program, which aims to catalyze the development of automotive industry in Africa as the continent commences trade under the African Continental Free Trade Area. Under the terms of the MOU, Afrexim Bank and AAAM will work together to foster the emergence of regional value chains with a focus on value-added manufacturing created through partnerships between global original equipment manufacturers, suppliers, and local partners. The two organizations plan to undertake studies to map potential regional automotive value chains on the continent in regional economic clusters in order to enable the manufacture of automotive components for supply to hub assemblers. That's a wrap on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.